Joining me for more is Steve Odland, President and CEO of the Conference Board. Steve, it's good to speak with you. And that stat takes me by surprise, especially given the NRF stat we saw where they suggested we could see the first $1 trillion Christmas or holiday season. What are you seeing in your data and why?
Yeah, well, the NRF stat is a little narrower than ours. Ours is all holiday spending and travel, on clothes, on parties, on food, the whole thing. And it's expected to be down a little bit. However, when you look at where that is, it's not among the wealthier consumers. It's not among the older consumers. It's among the younger consumers who are cash strapped. So the shutdown relief comes just in time for the Black Friday sales. When you look at where the younger people are going to spend, they're going to spend in November, not in December. And so they plan to necessarily not buy fewer things, but to spend less on them because of all the deals. This should, in turn, pressure retail margins this season. Interesting.
I mean, we have seen the ding to consumer sentiment and all of those types of readings, including your own, amid this government shutdown. And of course, this is the longest one on record now. So is the expectation that you start to see some of those sentiment readings recover from here?
Yeah, the Conference Board's Consumer Confidence Index was down, but it's been, roughly in a range here. People are waiting for the inflation to ameliorate. They're waiting for, the next step on the tariffs and the trade deals and everything. But it's all around jobs, and jobs are pretty secure here, even though there are layoffs and from a company by company standpoint. In the economy in total, jobs are pretty stable. Wages continue to go up. So there's still cash out there. There's still consumer debt available, even though that is at an all-time high as well. So I think people are going to spend. They're going to buy the gifts. They're just going to be really selective on what they buy.
Yeah, I mean, if promotions are going to be in focus and we don't have the same sort of promotional environment we've had in the past, maybe perhaps in part because of tariffs and leaner, meaner inventories at retailers, do we know how that ultimately results? Does that mean folks paying more than they intended to, and maybe you have a quieter spending period coming into the beginning of 2026, or does it shake out a different way?
Well, people always say one thing and don't always do what they're going to say. So even though this survey says that they're going to spend a little less, they may not. I mean, if they have cash, if it comes back, if they replenish, if they've got some debt, they tend to get a little antsy and, want to buy a little bit more. I think you'll continue to see that pressure. Our consumer-based economy wants to spend. And then you'll see a little bit of a bump again when the sales start in January. The question is, where does inflation go? Because the tariffs are impacting inflation, we project at the Conference Board, by about 50 basis points here in the latter part of the year. If that starts to ease off, well, and inflation comes down, that gives us some more breathing room and some more room for growth.
Looking at these findings, 70% avoiding travel and staying close to home. And you say that's similar to last year. Is that an inflation story as well, or something else?
Yeah, it's partially inflation and partially because it's just awful to travel right now. The elected officials are coming back to vote. I don't know if they're going to get here because everything's closed. It is just so hard, and I think people are going, I just don't want to go through that. So there's a little bit of that. But if that eases off and the air traffic controllers get back, it gets easier to travel again, I think you'll see some spending.